wait five minutes or so before we start. Thanks for joining us on time today. Just 5 more minutes. Thank you. Topic, it's on the macro perspective of the Singapore property market, and in particular, it's okay. This topic I will go maybe a little bit off to touch about little points here and there, but it all revolves around how this macro micro comes together and affect a Singapore property price, and especially during this COVID situation. At the back of our head is how what is going to happen with the private property price. Right. Thanks for joining me. So past, present, and future. What I meant by that, I just try to put everything together because I don't want to have too long a subheading. All right. The idea behind that is to know what it's in the past. That's why comparison with the 97 Asian financial crisis, the 08 global financial crisis, looking at these things to see what are the fundamentals back then. Is it similar? Is it different from now? And with that, can we predict the future prices? That's kind of what I meant by past, present, and future. And of course, importantly, the last point about ABSD, will it be reduced? Or rather, maybe after my presentation, you'll realize that perhaps the likelihood of increasing is higher. All right. So I think we shall start. Yeah, I think why not? Let's go ahead and start. Okay. So first and foremost, disclaimer. Like all presentation, there will be today's sharing is purely based on my opinion. I should not be solely relied upon for any decision making. So the idea, you see, the whole topic of real estate is very huge, right? Today I'm only talking about the macro perspective, and it's only on residential. It's not even on commercial shophouses or offices or buildings, right? But ultimately, when it comes to your decision making, you will see some linkage, right, from what I'm going to share to whether you're a first timer, you're a multi-property investor, you're holding a HDB, you're looking to upgrade, you're holding a condo, you've got a few properties, you're thinking of restructuring. So I'll try to do as much linkages to see what you can do. But the whole idea is you have a basic understanding of what I'm going to say today. And if you're going to make your own decision, I mean, I'm always free, no obligation. Give me a call and we can talk about it on a separate personal basis, right? So if you have any questions today, feel free to put inside the chat box. I don't know if I have time in this 1 hour because I don't want to take up too much of your time. I think most of you over here are very busy people. I'll look at the question. If there's time, I'll answer. If not, I'll answer personally to you. Just take note of just write down your questions. You can PM me, you can put into the chat. All right. Okay, I'll be using this chart quite regularly throughout my presentation because it gives a very good perspective of the entire market. Okay, this is the private property average PSF price since 1995 to 2020. Okay, the first part of my presentation, I'll be talking a little bit on the market fundamentals. Something that's light, maybe you've already known, and then I'll slowly build up upon it. All right. Towards the end is where probably there's more interesting part, there's more intensive information, but I hope you can stay throughout. And so also during the back, I'll probably review some bonus elements and the key question of whether ABSD will be reduced or increased, right? So for this first segment, the idea, what I want to share over here is if you can look, you can see the trend. I think this is well known. The high is always higher than the previous high. The low is always higher than the previous low, right? And there are several drops that I put over here. Asian financial crisis, the dot-com crisis, the global financial crisis, the cooling measure immediate effect, and even currently at around -4%. Right? I didn't really want to do a comparison with the normal kind of SARS, H1N1, MERS or Ebola period, mainly because the effect is negligible, right? Most of the effect you'll see over here is in the Asian financial crisis and the global financial crisis. And it's a fact, COVID is a global pandemic, so the effect will probably be somewhat somewhat similar to that. Okay, but take note of how this property market, you can see the green trend line, it's going up, right? Why it is stable and resilient. The next few slides will explain so. Okay, and in this process, even before the COVID situation, right, you got all these external and internal noises. I'm sure it will remind you of something, will recollect about something. You find that sometimes on newspaper, people will say that this and this will affect the market, like the Brexit situation, the Korean crisis, the trade war, which is not just today, it probably started 5 to 6 years ago. The cooling measures, when it started, interest rates going up, and even there's some supply issues here and there that some people thought would crash the market. But if you look back at the chart just now, these are actually external and internal noises that never really affect the market. All right? Why is that so? The fundamentals of Singapore, the fundamentals about property in Singapore, it's built upon the fundamentals of the Singapore structure. Okay, look at the unemployment rate in Singapore. Besides Thailand, I don't know why they have such low unemployment. I don't know if their reporting is correct or not. But in relation to the rest of the countries, okay, you can see that we are the lowest. And in fact, it's always been low. It means something that means structurally we are correct. And it's not just other manufacturing jobs, factory jobs. No, we are having good high-paying services jobs in general. And it's good to also, again, instead of doing a comparison, in the OA period, during the global financial crisis, the increase of unemployment was probably around 1 to 2% only, right? From 2 to 3. So probably this can be an effect on, this can tell us roughly what is the unemployment to foresee in this COVID situation, which isn't going to be that bad, all right? Yes, okay, then this is talking about our savings as a percentage of our GDP. What it means is literally how much we save from what we earn. You can see Singapore is the highest, is among the highest, and is even increasing over the years. I mean, the first look at this, immediately I find that, wow, Singapore is very near. And it's not really that good because we need people to spend money to stimulate the economy, to have the multiplier effect. But on the flip side of things, when we're in this COVID situation, in crisis situation, we tend to appreciate these kind of things a little bit more, right? Because we know that with higher saving power, if people are saving more than 50% of their income, they are able to withstand shocks. They're able to withstand downturns, right? It's just a layman terms of understanding. So if I translate this into a potential, if you yourself are looking for something in the near term, probably if you're expecting prices to drop by a lot, maybe sellers have a better holding power, right? Think about it. So if I put all these things together, you can look at a comparison between 2007 to 2019. While population increased by 24%, our household net worth doubled, right? What does it mean? I mean, probably more people are saving money. And we drill down some more into some of these little details. Just by liquid cash deposit in our banks or foreign exchange deposit in our banks. Even in the 07 period, 193 billion is enough to pay down all the liabilities. But it improved even better to 470 billion versus a total liabilities of 300 billion. So, and I haven't even included the shares. These are also very liquid components, right? Together with the CPF element towards the end. So in other words, if Singaporeans were to pay down together, of course, there's the rich and the low end people. But in general, if Singaporeans were to pay down everything, it's possible we won't have a single debt. All right, so think about that. Okay, so price index, probably you're seeing this quite a bit. They UOB probably put this everything from 2010. They look across all the countries, and you can see Singapore price actually never go up. Well, it's common, people where even though it's cheap or expensive, people will say that it's expensive. But it's good to look at things in perspective when you're looking at other countries, right? In fact, our prices never really go up. So if it's always very stable and it's always maintaining at the bottom, what is the chances of it dropping even lower during a crisis? All right, I think the likelihood of that happening will be very low. So this is another chart. Again, it's a very good chart. Comparing the home prices to income ratio. This will be a better guide, right? Because if I'm saying that if prices never really go up, but if our income drop faster, then it's very scary. But if you look at this, in fact, our income rises faster than the home prices, right? The ratio decreased from 7.3 in 2010 to 4.6 in 2019. And you look at it in comparison to the other top cities around, we're actually the lowest. So it means that property prices to begin with is already very affordable, right? Will it drop substantially? It's a question you should ask yourself again, all right? So UBS have this real estate bubble index that they publish every year, okay? Two charts over here. From 2018 to 2019, you can see that Singapore prices never really increased. And a second chart on the right, of course, they have a certain matrix. It's called the UBS Global Real Estate Bubble Index. Certain matrix they run through, Singapore is in a green zone. It's a fair value zone, right? As compared to other countries, it's in the red and the yellow zone. And in summary, they put there, the risk of a price correction is limited by sound market fundamentals, including a declining vacancy rate, good affordability, and a healthy employment market. Right? It kind of sums up what I just went through earlier. Right? So it's good to look at this from into this context when we're having a crisis, right? Because we know that actually we're already in a very healthy zone. We are not in a very overvalued, we are not in a very speculative zone. So probably few shocks to the prices, shocks to the economy will not affect the prices that much. All right. Okay, so this is something interesting. Not many real estate professionals will talk about it, but I'll delve into this for some time because unknowingly this is having a huge impact on our pockets, on our wealth. Okay, let's say we don't even compare talking about buying properties in other countries. Our Singapore currency strength, just by keeping your money in the bank, not doing anything versus putting your money, changing your money and putting your money in another bank of another country, you have probably earned a certain kind of wealth already because of our strong currency, because of our currency actually appreciated across many currencies. Not every currency, but I'm confident to say most currency. Take, for example, the two countries that our kids usually go to, right, to study, Australia and UK. Right, I'm sure people have bought properties there, UK and Australia. In Australia, 1.2 to 1.3. If you're unlucky and bought during that time, and versus now it's 0.9, it's a 30% drop now. Right? In UK, if you bought during the high twos or even the $3 period, now it's around 1.7. It's almost divided by 2. Correct? So my point is this, right? If we own our own HDB, if all of you over here you own a HDB or condo, I just want you to be very rest assured that just by not doing anything already, you are already making some money from this currency exchange rate, right? So I showed the chart of this Singapore versus Malaysia because this is our immediate country, immediate neighbor. If you have bought a property in 1980 over there, and that property tripled in price, unfortunately, you don't earn a single cent. In fact, you actually lose money because there's opportunity cost. If this amount of money in 1980s, you bought something in Singapore, you bought even HDBs or you bought some small little shops or here and there, you probably earn so much more. So I haven't even factored in the opportunity cost. So think about that. And moving forward, you'll be asking, right, will the currency strength be strong? So there's some macro things that I need you to understand over here that we are a financial hub. Okay, we are export and import, a very trade-dependent country. And overall, we are a net import country. So the direction for MAS is always very clear, right? They want to maintain a stable currency that is also appreciating through this price band compared to a basket of currency. And you can see it's been successful in controlling inflation. And at the same time, it's a stable kind of currency, something you think about like Hong Kong, which is pegged to the US dollar, or even Swiss franc, although it's not pegged anymore to euro. But these are all financial hubs where the currency itself is very strong. It's a symbol of a defense, of people putting the money over here. So you can envision this currency strength to be strong moving forward. So translating to present situation, if you're thinking of putting money, you find that Singapore property is not exciting anymore. If you're thinking of putting money to other countries compared to Singapore, maybe think further of how this currency will affect. Because just for Australia, comparison sake, from 1.2, 1.3 to 0.9 now, it's a minus 30% difference already. All right, okay. So just now I've mentioned a lot about it's more of the pooling effect, the market fundamentals of Singapore, right? So I always like to see things whether I can control or whether I cannot control, right? If things I can control, I can do better, which Singapore has been doing quite well, I would say, as compared to other countries. But lately, there's a situation whereby there's a pushing factor for other people to put money, for other people to move over to Singapore, right? I would say the most relevant one would be the Hong Kong issue. And this is also top cities, right? And in fact, they're competing financial hub. Just yesterday, the newspaper talked about China trying to enact some military law, some security laws over there. And I believe this whole saga will not end. And on the ground, I can feel it. I can tell you from my personal experience, right? Last year, there were many expats that were moving. Companies are shifting their Asian Pacific headquarters to Singapore. This is a fact. And we are seeing more wealth coming to Singapore. Of course, Malaysia, we thought the 1MDB is a full stop, but then again, you have more and more of this political saga, and Malaysia is just one of them. I mean, there's other countries that's quite unstable. So it's a good thing in general with a push and a pull effect, right? I can tell you wealth will always be coming to Singapore. All right, so that's mainly for the market fundamentals. I'll look back at this chart again, right? You'll see now, I'll start to compare the times during the global financial crisis, right? The minus 33% back then, and the current situation right now. But I'll say during this period of time, the main things that was implemented was these cooling measures, and it had a very good impact on the market when you look back at things, which I'll be talking about, right? So I always maybe give a brief history about myself. I joined this industry in 2013, in January of 2013. I can tell you January 2013 was very scary also, because it was the day where they increased the EBSD substantially to second properties for Singaporeans is 7%, third property and above is 10%, and foreigners at 15%. I got my license in July 2013. That's where the TDSR came about. So it had an immediate effect. You can see there the drop of 14%. Probably what they did was to stamp out a lot of speculators, to weed them off, and to kind of clean up the market, right? Then from there on, it still continued going upwards. In fact, a lot of experts say without the cooling measures, this chart would have gone exponentially higher. Okay, let's take a look at it further. This report, quite recent, it kind of sums up what I mentioned earlier. Also, total household net worth in Singapore grew 57%, but the total value of homes grew by only 29%. Right? Housing prices as a ratio of earnings dropped as home prices moderated, while wages grew at a faster pace. Affordability improved, and our cash and CPF also increased quite a bit. Now let's take a closer look, right? ABSD during the global financial crisis back then. What we can see, last time buying properties is so much easier, right? 0, 0, 0, 0, everything zero. Foreigner zero, company zero. You can imagine if I'm owning a company right now, if I got some working capital from a big project that flow in suddenly, I can use as a down payment to buy something, to speculate on the market. But fast forward to 2013, where I started real estate, you can see the first major one was the 710, January 2013, the 710 and 15. And then even now, 2 years ago, 2018, right, increased to 12 and 15. When we look back like this, I remember some investors, some of my clients were saying, wow, actually 7 was very cheap. But it's always easy to look at in hindsight. All right. So seller stamp duties too, at that time we could flip the option immediately, right? The next day, a week later, or a month later. I mean, I still remember students being paid by agents or even by investors to queue up at the show flat overnight so that they can have a first right at choosing a unit to get the option and then flip it immediately for 10 or 20,000, something like that. But the cowboy days are gone, right? If you are in the market to buy something that's speculative in nature, I can tell you it's almost gone. So the seller stamp duty has been reduced to 3 years, from 4 years to 3 years, but you know that there's still the seller stamp duties there to stifle all the speculative activities. So this is also I'll say this is the more important one, the TD part of TDSR. Beside the 60% limiting our income to how much we can borrow, right? The decreasing of the loan to value has a huge impact on the down payment. Take a look. January 09, that means it was before January 09, during the global financial crisis. Your loan to value is 90% for second, third, even for companies. That's why I say 10% down easy, 1 million back then, 100K. Some of these 100K, I don't know if they can move funds around and then put this 100K, they can accumulate a lot of properties. So you can imagine, think about it, the drop, it was quite substantial back then, 33% in general. But it's probably because there's a lot of speculative activities, right? And then fast forward to now, 75 and 45%. What it means, I just give you an example. 45% loan, it means that you have to put down 55% in down payment. Correct, 55%. All right, 55%. Remember, the second property, you have to pay another 12%. That is your ABSD, correct? And probably there's a buyer's stamp duty of around 4%. If you add that up all together, sorry, my pen is it's around 70%. 70% of down payment that you have to put into the property before you can buy it. 1,700,000 cash. So is it safe to say anybody that really want to speculate to buy more properties, they must be able to afford to pay for it? Okay, and think about that. It also for the first property, now this 75% loan to value, it is already very, very stringent. You have to pay down payment of 25% at the start. So in a lot, because some of people are also asking whether there's bank sales, fire sales, things like that. If just by looking at this valuation thing and how much loan that you're getting from the bank, it means that property prices must drop by more than 25% before a margin call is being called. So think about it. Is it easy to reach the 25%? And I'm talking the 25% is from the day that you bought. Because this 80, you can see previously 80% was already in place in 2010, 10 years ago. So from 10 years ago until now, probably you have paid out another 20 to 30%. You have paid out around 50% of the value. So the property prices must drop by 50% before a margin call is being called, before it goes into a fire sale. So if you're waiting for a fire sale, put it on the ground, probably the chances of it happening might be low just by looking at this. So it's a lot about facts and figures. Yes, I have my opinions, but I'm looking at all these things and making kind of some predictions about what things will happen. Okay, so because of all these cooling measures, right, the home price and the household income, you can see from 2013, I talked about the stringent cooling measures that came about. The separation widened, correct? Our income grew faster. Our home prices, I'll tell you, kind of maintained throughout. And this is something I think the government is very proud. I think they've done something right. A lot of people thought that the cooling measures was meant to crash the market, but I think they defined it nicely, really cooled the market. So now people are buying properties more affordably. They can afford, right? They're not overstretching themselves. They have enough buffer to withstand any crisis like this. All right, so to sum it up all here, I just want you to have an idea, okay, if we are going through this very tough ride in an ocean with turbulent, violent waves, what kind of boat do you want to be on? Or rather, which boat will you want your briefcase of cash to be on? since we talk about the market fundamentals of Singapore and the cooling measures already in place. Let me try something interesting over here, that this poll function, where you can select which boat that you want to be on. Let me launch the polling. All right. So while the polling is being launched, I can briefly explain, just to make it more interesting, because it can be a lot of facts and figures and it can be quite tiring. So a sampan is something that is light, it is easy to construct, right? You don't even need factories. You can probably go and chop down some woods from the forest and build it, but immediately you launch and go. Is it safe? I don't know, but it seems that it's fast and go. You don't need to build much things. Or you want to be in a speedboat, very nice, modern, right? Modern speedboat can go very fast, but you know your ride is going to be very volatile because you have a small vessel, right? When a big wave comes like just now, will your engine stall? Think about it. Or you want to be in a big ship, a big cruise ship, right? It takes years to build, right? Take years to build, solidify, galvanize steel at the hull, so that you can go through obstacles, go through waves steadily without feeling any effect. All right. So yes, some of you have voted. Interesting. Thanks for participating. I'm going to show you the results. All right. So I think most of you are sound, or some of you are more speculative in nature. You know who you are. Most of you want the cruise ship. I think Singaporeans in general, we are saving more than 50%. You want to be risk averse. If you want a speedboat ride, probably I'll go through, touch on it a little bit when I talk about property versus stocks in a while. So correct. But you ask me again, Zavier, hey, if I choose this cruise, I remember Titanic, the show, it still hit the iceberg and still sunk, right? So along the way, when we have something, for me, I'll choose a cruise ship, and I think Singapore is something like a cruise ship. But along the way, we have to improve. And when something like this hit, right, we have to look at presently, what is the measures in place to help us ride through this crisis? Is it enough? I'll be sharing in a bit. All right, interesting. Okay, lo and behold, right, the COVID situation struck, like the wave struck our ship. Okay, so immediate impact, I think everybody of us are always geared towards negative news, which is, oh no, right, property prices will crash, stock prices are crashing, it hit the circuit breaker, the 10% limit, the Dow Jones, right? Wow, we get to be very, very afraid. But when we really sit down and look at things, remember, we are also building up throughout, having a strong fundamentals, a good push and pull factor in Singapore, and at the same time, the cooling measures. How are you going to ride this through? Sorry. And then, before I talk about some of these measures that are in place right now, it's good to know why are they even in place. Although we are already very sound, but why must the government do so much thing? Think about it. We have the highest home ownership in the world, right? And 91%. Of course, home ownership, there's pros and cons, this and that, but in general, the government wants everybody to have a stake in Singapore so that even though we may not be doing well, but at least as a proxy to Singapore's growth, we have a piece of something. So this 90%, this 91%, take note, it is around 75% HDB owners and around 25% private property owners that constitutes your condo and your landed. Okay, I believe the government is not so much bothered about this 15%, right? The fact is maybe the 15% is holding most of the net worth. This 75% is the people they are more concerned with. But indirectly, you think about that, if they are going to benefit this 75%, the other 15% will also benefit in some way or another, because we all have indirect stake in some of these policies and things like that. So what have they done? Okay, so many news on the newspaper, right? This and that, so many budget. I even lost count the budget. And we have another one coming on Tuesday. But if I'm not wrong, it's around 3 now. About unitary solidarity and resilience. Correct. I just put this everything together. You're looking at a total stimulus of around 60 billion. Okay, take note. This stimulus is a fiscal stimulus. It comes. I'll be talking a lot more of this econ term already, so it's a little bit more intensive. Just bear with me. So this 60 billion is fiscal spending. It's the government spending. Is through what they earn from taxes and what they spend. If there's a deficit, they'll take obviously from the reserve, right? and it makes up 12% of the GDP. This is unprecedented. So give you a perspective, in '08, only around 20 billion was being spent for the global financial crisis. 20 billion, and it's around 7 to 8% of our GDP. So you can see that right now you're spending 60 billion and 12% of our GDP. And I envision even more coming Tuesday. It is a big thing that they're trying to stimulate. They're trying to build more defenses for the economy, right? And besides just pumping money, you have for the property sector, you have individuals that can apply to defer property loan. You see, all these are a bit of they're not really removal of ABSD, but there are also some kind of relaxation of the regulations here and there, right? Because you must think, this also give you a clue whether ABSD will increase or decrease. What is the definition of ABSD? It's only for the private sector one, isn't it? Right? Does it really affect the HDB dwellers? You think about it. But anyway, for what they've done over here, they allow them to delay until the year end the payment. It might extend, okay, to defer maybe longer. I think that will be better so that these people have more buffer when everything start going again, lifted, and then we can start working, right? And besides that, MAS is also loaning the local financial institutions 0.1 interest rates, just excess liquidity, so that if any corporations or any individual needs funds, these are available freely and cheaply around. Okay, this too will be the latest one. Developers can get exemption from QC scheme, and another 6 months extension for their sale of the property, for the sale of the units and the completion of the construction. So what does it mean is, if you're looking from the new launch perspective, from the developer perspective, I think these are measures such that they don't feel that hurried. So because they have more time, and probably because of this, they are not too impulsive to give, or they are not being forced to give a substantial discount of fire sale price. So if you're looking for all these fire sale prices, maybe the likelihood of it happening is a bit lower because of all these measures. All right, so again, we want to look at it in comparison with other countries, to look at it in relative terms, right? So this is a chart of the G20 countries. Okay, what is their fiscal stimulus as a percentage share of their GDP? Unfortunately, Singapore is not a G20 countries, but because of the 60 billion, 12% of GDP, it puts us on the rank number 2 on how much spending government is doing for the citizens, right? It is a lot. We are even above United States. Of course, they have their monetary stimulus, which I'll talk about later, and the impact. But it is still a lot. For a small country like us, they're spending a lot of money, okay? So as much as I talk about all these measures, right, I think at the back of our head, we'll be thinking again and again, what would the drop be with this COVID situation? And again, I'll be using this global financial crisis, the minus 33% to talk about. You see, it's easy to just look at it as minus 33% without looking at the actual details. So I did one step further to look at the breakdown of this minus 33%, which is very interesting. Okay, so look at this in detail. I know it's a lot of lines, a lot of numbers, but this is very, very helpful. Basically, I split this up into three sectors, right? Your common known sectors. CCR, Core Central Region, that will be your District 1, 2, your famous 9, 10, and 11. RCR will be rest of core. That will be like your Queenstown, your Thompson area, your Amber, your Mayor side. And of course, the outside core would be the Jurong side, probably the Admiralty, the Woodlands, the Punggol, the Tampines, the Simei area. Look at it in detail. What makes up that 33%? You can see, wow, it's actually the minus 42%. And it kind of makes sense, isn't it? If you think about what I've gone through just now about not having these cooling measures back then, it was more speculative in nature. Companies and even foreigners are speculating more because there's no ABSD to begin with. So they're buying more, and typically they're buying to the CCR area. So you can see the up was very high, and then the down was very, very sudden, minus 42. And then you start to look at the RCR and OCR. region where most Singaporeans, I'll say, are staying, who owns our home. These are all private homes, not HDB, but also most of us are also, some of us are staying in private houses. But this location, in that time where it isn't that strong fundamentally, without cooling measures, it only dropped by minus 18, minus 16%. It's not that bad. And the bullet points over there, they're all quarters by quarters. So you can see the drop is not so drastic like the CCL. Wow, the entire one dropped like 10% from one quarter to another. But you can see for the OCR and RCR, it drops little by little. But even then, you only drop by minus 16 and minus 18. So what's the point I'm trying to make over here is this. If you're looking, because we know now that already buying a property is not speculative in nature, right? It's even very hard to buy a second and third property with a second and third loan because the loan to value is so high. Most of us are probably restructuring, we're looking to buy our first home, or we're just doing the sell one, buy two method, right? So if you're thinking of doing that, and some of these locations are the RCR and OCR locations, it isn't that bad, isn't it? If you look at the minus 18 and minus 16, bearing in mind back then, stimulus was lesser, cooling measures wasn't in. And also remember, in the last 10 years or so, there's something called the master plan. The main focus of the master plan the last 10 years is decentralization. Right? What is decentralization? What is decentralization? You see Paya Lebar, you see Jurong, second CBD, you see Tampines area, you see Woodlands area, you see a lot of this sub-regional center. So they're moving businesses to these locations. And the whole idea, I believe, the government wants to spread the wealth, the growth of the nation to every part of Singapore. So if you're looking to buy something in RCR and OCR, I think you can be safely assured that the drop will not be that substantial because of looking at this example. All right. So I'll veer a bit out now to talk a little bit about different asset class. Okay, because this is a common question too, and it's also a dilemma even for individuals like myself. Should I put money in stocks? Or what is, especially now stocks have drawn, always recovered, there's things like that. But the point over here, if you're looking across financial assets, is emotion. It's the element of emotions and timing. That's the thing I can't seem to get hold of very well. Because when there's emotions involved, okay, it's very hard to make a sound decision. And stocks by nature, it's something that's very, very liquid. Okay, I'm not an expert. I'm just talking based on experience. I think some of you have made a lot of money from stocks. All that I applaud you, but I'm just saying in general, that's what I feel. Okay, stocks is something that is very, very liquid, right? I remember it's just 2 months ago, right, when the stock dropped by 10% every day. In the US market, if you're holding stocks by then, imagine, give you an example over here, NASDAQ. Imagine it dropped 10%, I have holding power at home. Drop another 20%, wow, a bit kia already. Drop by 20+%, I think I better zao, because at that point of time, you see everything rate, newspaper rate, your friend talk also rate, right? Wow, there's some emotion and so easy to trigger the buy and sell button. You want to sell, boom, gone liao, because 1 month later, where we are right now, actually this chart is not even updated. I think Nasdaq now is around 4 to 5% from the top already. We've missed it altogether. So that's the thing I'm trying to emphasize over here. Unlike stocks, property is something whereby when you stay inside, when your tenant is paying your rental, you can go home and sleep, you can go and work comfortably without thinking so much. At the end of the day, you're investing in something that's more broad-based. It's not like, for example, this over here, right? It's not something that's particular in a particular sector, a particular stock. And I use all this comparison. I'm not using penny stocks comparison. I'm using blue chip, that Temasek has a strong holding power. There's a strong holdings to it. Look at UOB at around $19 now. Wow, it's actually back to 2007, 2008 prices there. Isn't it scary if you hold something like, yes, there's dividend, but the whole idea, I think most people buy stocks. If you're young, you also want the capital appreciation. It's back to then prices there. Take another example, Sembcorp. This hits me real hard because I also own shares in Sembcorp, right? It was going down, I thought, wow, cannot die one. I every day clear my rubbish. But how I know the marine keep going more and more jialat. But that's the point, right? So the prices now for Sembcorp industry is all the way to the early 2000 period. And this is a blue chip. So usually what happens, this is a common term, right? When the prices go way below our comfort zone, we become long-term investors. Think about it. Then Singtel, look at that, it's also around the 2000 prices already. And of course, SIA, there's no need for me to say. And look at that, as a long-term investor, a tech stock used to be our darling. Ask yourself this question logically, as a long-term investor, can this price go back up to $50? Or even, don't say $50, go back to $10. Now it's at $2. Yeah. So unlike, again, the chart over here, unlike this, if you have bought at a peak in 07, of course, you don't buy the most expensive one like Market Patterson. Maybe the prices haven't really recovered. You buy something reasonable. I can assure you right now, you don't lose money, or you definitely make some money. And also remember the value of other people's money inside property, the value of this leverage, the safest leverage as compared to stocks when you're paying in full. Okay, so I was past, present, and future. So this is talking a little bit on the future. What I always like to do is I like to preempt. I like to look at what are things I can foresee in the future, right? So I look at the China market that has already recovered, and people have already gone back to their normal daily lives. It looks like the pent-up demand has been strong, and it might be a good example that Singapore might follow with this also. This is a second updated report also, talking about a lot of units. There's a revenge spending, a lot of home buyers going out there, right? Even at the Hong Kong market. So probably, okay, so in this last 1 month or two, I think you've seen the newspaper report, there's still a lot of properties that's being sold through virtual contacts. The demand is still good, right? But I believe the pent-up demand might follow something in the Hong Kong and China market. It's something to think about if you're trying to delay your purchase further and further down the road. If you're thinking of timing the market, thinking of timing the bottom, I don't know if that is the right thing to do, right? So, okay, this is more technical. I'll slowly go into the more technical side, it's the more interesting side, right? So when you look at the monetary stimulus, okay, just now we look at the fiscal stimulus. Remember, there's two kinds of stimulus in general. Fiscal stimulus and monetary stimulus. Okay, Singapore, we don't have a large money base. Anyway, we are a small economy. We don't have much consumer spending power. We are open economy. That's why we are using an exchange rate policy as our monetary policy. And our fiscal to do immediate spending. But in other countries like the US, UK, and even the EU or Japan, right, they have this monetary stimulus. One of the inside monetary stimulus, there's two kinds. The main one is for them to manipulate the interest rates. So in general, when the economy is not doing well, you'll see interest rate dropping, like what we are seeing right now. So Singapore, because we are a price taker, we are open economy, that's why we especially follow the US side. You see now our SIBOR rates are very, very low. And what does it mean, right? So if you can refi at a lower price, your interest cost is lesser, it spurs investments and spurs people to buy more property or invest in business in general. So there's an excess in liquidity because of the dropping of interest rates. And even now, just yesterday's papers, right, about the creeping interest rates, the creeping towards the negative interest rates. But I don't think it will be negative. SIBOR is always a function of SOR. So, and there's always a spread involved. It will go very, very low to zero, but it doesn't make sense for bank to pay you to pay your mortgage. Doesn't make sense, right? All right. So, in terms of monetary stimulus, you can look throughout the global economy. The global scale, there's a lot of money being pumped, right? And may not be enough. Singapore is doing more. I think other countries are doing more. Take a look at this US stimulus. Okay, this has a profound impact. Just bear with me for a moment. This can get quite technical. right? I talk about the monetary stimulus being one is the manipulation of interest rate. So when interest rate drops to zero, even negative in EU, when they don't want people to put money in the bank, you rather hide it under your pillow or you better invest your money elsewhere. Okay, but when interest rate cannot have to, when interest rate reach a certain point of its effect, they will do something called the quantitative easing. Quantitative easing, in other words, is like increasing the money supply in the economy. Literally, it's like printing bank notes so that more people can get access to money to buy something, right? So, but in the US, they don't really just print money. So what they do is they buy bonds. During the subprime crisis, the global financial crisis, they bought those toxic bonds that no one wants to buy, so that banks will be more capitalized, will have more money, have more liquidity, so that they can loan people. All right, so that's how it roughly functions. But you see, in the global financial crisis, the increase in the money supply, the quantitative easing, the printing of money, the so-called printing of money of 2 trillion took 4 to 5 years. But look where we are right now. I have to magnify this because the jump is too exponential already. The same 2 trillion was only in 1 month, and it from March to April, and it's still going up, right? What does this have an impact on Singapore? That's the question you'll be asking, right? So we are a financial hub, we are open economy, so investors are coming in, the push and pull factor. Somehow or another, through foreign investors, through businesses, money will be flowing into Singapore. And think about it, when all this liquidity are being pumped around, when the COVID situation settled down, where will it lead to? And we're already seeing that in the US stock market, right? I show you the Nasdaq chart. Probably some of the effect, a lot of experts are saying why the V-shaped recovery is there is because of all this excess liquidity. That's the immediate, because that's the whole local market. But will it spread to Singapore? I think if we look at it in the global financial crisis, after the global financial crisis, there's strong evidence that some of this money has actually flowed to Singapore. But now we are talking about 2 trillion in just 1 month, and it's still increasing. Think about the effect. All right. So this will slowly lead to the end of my presentation. Just hang on with me. Yeah, I think I'm still on time. All right, so quantitative easing like this is a necessary evil, right? Because you want to spur people to spend money, you want liquidity to be frozen, you want people to get the funds more easily. But it is a necessary evil, isn't it? Because as what a lot of experts say, the ease of money, the easy money of stimulus makes life harder for some. Even in UK, QE exacerbate the inequality. Then Federal Reserve quantitative easing expanded wealth inequality. So have a look at this. I'll try to explain in layman's terms, right? So you look at the US rates in 1980 when it was almost 20%. And then you compare to the bottom chart. The bottom chart, the brown, stands for the household wealth of the bottom 90%, while the blue line stands for the wealth of the top 0.1%. Right? You can see over time, when interest rate starts to drop from 1980 up to now where it's a very low interest rate environment, the wealth gap actually merge. It does not really make sense, because if you're spurring on the economy in general, the whole idea is you want everybody to benefit. So you want this gap, this bottom 90 and top 0.1 to be maintained throughout. That's why I say it's a necessary evil. Probably there's no best way to go about doing it. I think this is the most fast and effective way. But unfortunately, it worsened the inequality, right? We are in a capitalism economy, right? Singapore is similar with the US, with the UK, everywhere. So this is bound to happen. But in a simple layman term of understanding why in the 1980 the gap is wide. Think about it. If you can put money in the bank and earn 18%, everybody will be doing that. Yeah, it's very hard to get above 18%. So there is no there's no beta, there's no delta to create the extra to be different, right? So, but when the interest rates start to decrease, I would say, I want to make a disclaimer over here. I'm not elitist. I'll say in general, the people with better know-how, experience, knowledge, skill sets, even connections, right? With better use of this cheap money, they can do wonders. One of them might be buying property, right? The other can be buying businesses, investing in businesses. And it's a sad fact, but you can see the wealth gap is already merging. So what it means to Singapore market, what is the effect? All right, I don't have a lot of figures, but I just put this chart to show you it explains everything over here. All right, you look in the mid 1990s, the gap. I split these three line graphs. I split them into the private market, the non-landed private market, the landed market, and the HDB market. So if you look at the first gap in around 1997, can I safely say that it's easy to upgrade from a HDB to a landed? Fast forward to now, even for my line of work, I don't come across people, of course there are some, but I would say in general, most people, it's a little bit difficult to upgrade from HDB to a landed. But as I'm speaking, right, I believe in the future, even now, some people already have trouble upgrading from a HDB to a condo. As you can see from here. The effect, just now you see in the US market, is we are already following already because of the flow of easy money up to here, to Singapore. And then you look at it further, how does it apply to you? Look at the HDB market, okay? Just look at the stagnation throughout. And before the stagnation in 2012 to 2013, you can see the increase from 2007 to 2012. Actually, the increase was quite substantial. It's just that the increase relative to the landed and private and non-landed private is small. But the HDB market almost doubled back then. I remember back then after it doubled, there's a lot of displeasure on the grounds, and there's the election time also. And after that, HDB motto was very clear. All right, HDB is meant to be an affordable housing as a roof over our head. All right, it's not meant to be a speculative product. That's from that point on, you see that a lot of supply, a lot of BTOs are being pumped up to maintain the prices. All right, and also, so if you're holding a HDB, if I put this in relation to where you are right now, you're holding a HDB and thinking about what to do, right? Maybe you draft upon this a little bit more, ponder about this. If the gap separates wider and wider, is it easier to upgrade in the future? Or will the current situation, because volumes are thin, allow you to do this restructuring soon? Think about it, right? So this also explains whether ABSD will reduce or will increase. Think about it. As prices widens between the private and public side too much, what is the best way to redistribute the wealth? Can the government altogether say no more private housing? It cannot be one, right? We are open economy, we are capitalist, capitalism is a free economy. We can't say stop altogether. We still need foreign investors to come in. We still need to attract companies to set up, investors to come in, right? So unfortunately, the gap will widen. But what's the best way to redistribute this wealth? So for me, I'm thinking along the logic that probably the easiest way to do it would be to increase ABSD, and that's what I think. So I don't know when it will do it. I don't know when they will do it, but I feel that once things settle down, right, before the flow, the huge flow of 2 trillion and how many trillions are coming in, right, they probably have to stamp it somewhere again. So, yeah, that's okay. This is a bonus element over here, because a lot of times we think about just buying because we're thinking about when we entry, we want to time the market, time the bottom, things like that. But we forget that a profit is only realized upon sale. Correct. It's not always about buying, and it's also about selling. It's a 50-50 thing. I took just a very good example about of this, right? The Sims Urban Oasis, a newly TOP condo that's near Aljunied. 2 units, you look at it, 0814, 0543, very, very same specs. Same area, pool-facing unit, bought around the same price. But they made a 10% difference in profit, a 100K difference in profit. The main reason, the only reason why there's a difference is because of the time of sale. Okay, so while we are always fussing about when is a good time to buy, actually knowing your exit is equally, if not more important. If not, at the end of the day, it goes back to square one. All right. So as I come towards the end of this session, I think I'm just right on time. Great stuff. So I'll just leave you with these questions you have to ponder upon. It's like kind of a summary, but also it's a good way to reflect and think about and to digest all the information. Okay, do you think that owning a property in Singapore is safe? Fundamentally safe? Did the cooling measures make it even safer? And because of this, will prices drop drastically because of COVID? Is property a speculative product? Should we or can we time it? And beyond COVID, what will the impact of this easy money that I talk about be on property prices? Right? Also, what is the main purpose of HDB? Will private property be out of reach in the future? And what is the best way to narrow the inequality gap? More ABSD? That's my opinion. Right. So thank you so much for staying through. I hope you have gained at least some valuable insights. May not be 100%. You have gained at least 20 to 30, depending on how much you know. Yeah, I think it's very fruitful. But because this is something that's micro, it's not something that's tailored to individuals. So if you have any questions in particular that you want to ask me that relates to your circumstance, then feel free to PM me, non-obligation. But I would love to advise you. Thank you so much. And yes, that's all for today. Thank you. Thank you.